but they're not such a big fan of that when it leads to confusion and chaos and they're getting wrecked.
Today we have Michael Saylor as he shares his predictions on the future of Bitcoin in the next 4 years and how each level of blockchain will play into effect within those 4 years. According to Michael Saylor, as the demand for layer 1 blockchain cryptocurrency increases, so does the pressure to scale blockchain protocols. One of the most serious concerns is Bitcoin's position as its store of value. The usefulness of Bitcoin as a store of value is determined by how effectively it functions as a medium of trade. If Bitcoin does not exceed as a medium of trade, it will be ineffective as a store of value. We must win this financial war. Click the subscribe button to continue to learn more.
No, we're not worried about a margin call. We took a little bit of debt, but it was 20x over collateralized when we did it, which means like a loan to value 4%. And so, I mean, if Bitcoin went to $3,000 a coin, we'd have to post some other collateral, but we have other collateral. And Bitcoin, I don't think will go to 3,000 a coin, but there's a big difference between, say, taking on 10x leverage versus 10% leverage. If you have $5 billion in collateral and you take on 10x leverage, that means you borrowed $50 billion. If you have $5 billion in collateral and you take on 10% leverage, it means you borrowed $500 million. So we had, I think when we went into that, $4 billion of collateral, we borrowed $200 million. So it was a very thin layer of leverage. So I don't really much concern about it. The key with these things is you have to be able to last through the 4-year cycles. So when you lay out your strategy, if you can't last for 4 days or 4 weeks, right, then you're a speculator or a gambler. But when you're looking out 5 years in advance and you think about the volatility, then it's an investment strategy.
Margin is money borrowed to invest. However, the value of investment might fluctuate. Lenders have criteria for how much money you have on hand as collateral to satisfy your loan. However, if the value of your investment falls, your lender may compel you to provide further security or risk having your investments liquidated. During inflation, investments tend to lose their value due to hyperinflation in monetary systems worldwide. To offset the effects of inflation, individuals invest their money into assets such as stocks, bonds, and real estate because their value is projected to rise or stay the same. What makes inflation dangerous is the market circumstances impacting one financial vehicle, which then domino effects and impacts others.
If you look at the cryptocurrency market, what we call crypto, it really, first of all, they're not currencies. Second of all, they're all different. So Bitcoin is a crypto property and it's a crypto commodity. And a commodity is something that is issued in a fair fashion without an issuer. And so there's only a handful of cryptocurrencies that might be deemed as crypto commodities, and Bitcoin is 100 times bigger and more stable than any of the other possible crypto commodities. There's a lot of coins that want to be a currency. They're stable coins, but they're not currencies yet. And so you have, sometimes people think something like UST is a currency. But UST was an unregistered security, not a currency. If you have a currency, the question is, are you fully backed by collateral, and can you redeem the currency one for one in a crisis? And we're finding that out right now. When people tried to redeem UST, it crashed and burned. They're redeeming Tether aggressively. That's the front page story in the Wall Street Journal today. If Tether is able to redeem billions of dollars worth of Tether, then it will survive. And if it can't, then it will crash, right?
Michael Saylor believes despite Bitcoin being a decentralized currency, support and guidance from the regulatory body should be expected, as we will see a broader scale of cryptocurrency adoption on layer 1 of Bitcoin store value.
But they're not such a big fan of that when it leads to confusion and chaos and they're getting wrecked. So, as you look out over the next 4 years, I think that the market's looking for order, and it wants to emerge from the confusion. And until it gets that order, the free market's testing every component. So you have hedge funds testing the stable coins, and they're shorting every component in the ecosystem, and if they find something and they can break it, they'll break it. I think that you can expect over the next 4 years, you're going to have a variety of things take place. If I look at the future, I think we're going to see guidance and support from the IRS, the SEC, the CFTC, FASB, OCC, and FDIC. And so that's an important part of the industry growing up. I think that you're going to see broader scale adoption on the layer one of Bitcoin as a store of value by larger institutions, investors, companies, and a lot more retail.
Civilians in Ukraine and Russia have already started exchanging native currency for Bitcoin and other cryptocurrencies to hedge against the wars, resulting in fast inflation. As a result, Bitcoin has the potential to dethrone gold and oil as the primary store of value. As digital assets become more extensively used, Bitcoin has a strong chance of eclipsing gold's market share by 2023.
I think that you're seeing innovation on the layer 2, which is Lightning, and the layer 3, which is the application layer, like a Cash app. You're seeing innovations there in the transactional area or medium of exchange area, because you can move transactions 1 million times quicker and cheaper on the layer 2 and the layer 3. That's an important area to keep your eye on over the next 4 years. And then I think if you look at the entire Bitcoin economy, layer 4 is derivatives, like MicroStrategy stock is a derivative and GBTC is a derivative. And so you're seeing, and a BITO or spot ETF would be a derivative. You'll see a lot of innovation there. I think layer 5 is product. So when you build Bitcoin into a hardware device, a smartphone or a hardware wallet or any other device, that's very interesting. And then layer 6 is services, like building Bitcoin into an insurance product or building it into some other yield product or the like. So it's all of these things are all part of the maturing of the industry, and they keep it exciting.
Civilians in Ukraine and Russia have already started exchanging native currency for Bitcoin and other cryptocurrencies to hedge against the wars, resulting in fast inflation. As a result, Bitcoin has the potential to dethrone gold and oil as the primary store of value. As digital assets become more extensively used, Bitcoin has a strong chance of eclipsing gold's market share by 2023.
Yeah, we have a simple strategy, and our strategy is we just acquire Bitcoin and we hold the Bitcoin. So you could think of it as like dollar cost averaging for a corporation. And I think when you're in a chaotic macroeconomic environment, like we're living through, where you have a massive expansion in the money supply and then a massive contraction in the money supply, and people are being tossed and turned by uncertainty, then the best strategy to maintain your sanity as an investor is you focus on a basket of high quality property, scarce desirable property that you think that affluent, intelligent investors will want to buy from you in a decade. And of course, we happen to think that Bitcoin is the highest quality, scarce desirable property. And then once you've figured out what that thing is you're going to acquire, then you just keep acquiring it as you have free cash flow. And so MicroStrategy acquires Bitcoin whenever we have extra cash flow available. And because we're a profitable company and we continue to generate cash, we just sweep that cash into Bitcoin, and we designate Bitcoin as our treasury reserve asset. And so you give me an extra $10 million in cash flow, I convert it to Bitcoin, because there's been like 3 cycles in Bitcoin in the last 2 years where it moves up and it moves down. And if you try to time the market, you're going to be very frustrated. But if you look out over 4 years or 6 years or 8 years, then simply acquiring high quality property with free cash flow is generally a really good investment strategy, and it's a good inflation hedging strategy versus just sitting on cash. I think that for the industry to grow up, there needs to be more clarity. And so the key to keep in mind is, if you're trying to use the asset as a property right, and I'm going to hold it for 100 years, it's like property. And then in countries where they don't allow you to own property, like North Korea or in Cuba, right? The regulators are going to regulate you out of existence because they don't allow property. If you're using the asset as a currency, as a medium of exchange, and you want to trade it for coffee every morning, well, it's not going to be allowed to be a medium of exchange because the dollar is the medium of exchange in the US and the euro is the medium of exchange in Europe. Those are assets that you can trade tax-free, and properties are taxed when they're traded. So you're going to get regulated based upon how you use the asset. If you want to create a crypto asset and change the supply every 6 months, it's not a commodity and it's not a currency, it's a security. And you're going to get regulated as a security. You have to file a registration statement, and you have to file some disclosure to the general public telling them who made that decision, what other decisions are possible, what the risk factors are. So it's just natural. The regulators are going to regulate assets based upon the way that they're used, and there's nothing wrong with that. In fact, the only way the industry can grow by a factor of 100 is for the currencies to be treated as currencies, and for the securities to be treated as securities, and for the commodities to be treated as commodities. If you want to have your cake and eat it too, I want to change the supply. I don't want to pay taxes, and I also want to be a commodity, right? That's just not going to work, right? Because no regulator can allow that. It creates too much chaos.
We must win this financial war. Subscribe to keep learning the truth.